Hello, everyone. Welcome to the Chris Rod Max Show, where every week we discuss the latest news, developments, and trends in the exciting AI world and discuss it for you and understanding the second and third order consequences of what it means for all of us. So I am joined again with my co-hosts Max and Rod. Hey, everyone. How are you guys today?
Hi, everyone. Doing great. How are you?
Doing good.
Amazing. And guys, I think for this show today, I just realized that there might be a bit of a slowdown in activity that's happening in AI. And I think we've been speaking about very similar themes over the couple of last episodes. So for today, I thought let's look into China again. I don't think we've heard a lot about China these days and what's happening. And also the news is actually quite thin. But nonetheless, I would love to get your perspective on it. And then the second part of the show, we want to talk about a newly released report by one of the more known VC companies, by Excel actually. And I actually find the report very interesting because it is a really good summary of all the different parts that we've spoken about. And I would love to use this show today to really get your perspective, your interpretation, and also your so what of what it all means for all of us. Does this sound good?
Let's do that. Yes.
Amazing. Perfect. So on the China side, essentially the news piece that I've picked up on is, again, this whole notion that China is doing things very differently. And you can also see this in the Excel report. Like nobody really reports on Asia or China these days. It's really around, so what does the US do and also Europe? China seems to go another route also. We've spoken about it like a couple of episodes ago where we talked about this AI in a box concept. Like for each industry, the government would sponsor some subsidies, and then you would design a supply chain AI for all the supply chain companies. You would design a finance in the box AI for all the finance institutions. So apparently the latest trend on the China side is that China now deploys different data centers across the entire country. So from the Gobi Desert to basically Shanghai, you find data centers. And what it sounds to me is they want to build this huge brain, connect all the data centers with optical fibers, and essentially power, I guess, an ultimate artificial intelligence, I would say. And this is in stark contrast, perhaps, to what the US is doing. I mean, we also spoke about data centers in, I believe, Virginia or some, less popular states, I would say, or less known states, at least for the people not sitting in the US. And then obviously there's this whole like compliance and EU Act conversation that we have going on in the West. Really, what I would love to know from you guys is what is your interpretation of the long-term impact of China's, let's say, decentralized computer power corridor? And what do you make out of this? And maybe we start with Rod on this one.
I would say it's just different ways how to organize things. Is in the end, in China, it's possible to do things more planned and then maybe allocate resources to areas that commercially will make less sense, but maybe for development purposes or strategically reasons, it might be a good idea to develop something there, put a data center there. But if we look back, let's say like from a European perspective, something like this happens to a certain scale. So for example, if we were to say the European Union is like a whole country in some form, then you can see how for data center related activities, there have been two large hubs that have developed across the Union. One is Germany, which is very intuitively because of all these privacy, security, and so on that people value. And then the other one is Finland, where you have something similar, but where energy costs are much lower than in Germany. So in a sense, you start to see that, but it's more the question of what is more efficient, to have a distributed network as China is developing, or to have centralized nodes. When I was reading this report from the newspaper, I was thinking, this reminds me a little bit of blockchain and crypto, so where you have centralized approaches and decentralized with the pros and cons. Max, you're an expert in the centralized strategies and everything that is related to the blockchain. Do you see this parallel?
So interesting. I think back in July or something like that, there was an article that came out around data centers for China, which is, they're trying to go for East data, West computing. I think this kind of reflect the population of China, no? like majority of people technically live on the coastal area, which is the western side, which is all the largest cities. And then on the eastern side, it's really like, protection buffer if you want, or a place where you have less sparse population, or just a sparse population. And I think, China is just really trying to play with the strength that they have, again, when it comes to really coordinating across the country. I think agree with Rod's point around China has been, I guess, quite successful in planning the country, if you will. As compared to the West, we have a little bit more freedom. People tend to see, where are the cheaper places, and then they go. Sometimes you have policy to, I would say, increase the interest and incentivize people to build in a certain places, but that's not 100%. We saw it when Tesla was trying to fight for the HQ. We saw this when, all the different states in the US was trying to court Amazon, for example. And the reason why I said that is, I guess, has a lot to do with the way the country plan, I would say, setup of this new wave of technology. So it's great that they're taking a different approach, number one. Number two, I guess it kind of just reflects the reality on the ground for China. And then I guess number three, overall, I think it's a very good thing for the whole world, because if they're building data centers, means they're really thinking about AI, right? When it comes to a strategy for the whole country. And I always like the fact that there is I guess, competing forces, both in ideology and in things, in the way things are being done. And I think that is important because it helps us to then decide what is the best way of doing something. And I think, Rod, while you said that, EU is like one country, but I would slightly disagree with that, because today, if you were to do data, let's say in Spain, you don't really have a problem. But the moment you enter into Germany, you have to set up, I remember you have to set up like a data centers or use data centers out in Germany because of data privacy issues. So hence, we're not that big to begin with. And then if we're doing some of this, it kind of just, fragmented our ability to use those data a little bit better from AI perspective. But I guess, there's no right or wrong, only time will tell. Maybe we are happy foregoing some performances, but ultimately it will be safer for everybody. So again, I guess the point I'm trying to make is it's good to have different ways of doing things. And also, I think it reflects the reality on the ground for China.
Very interesting. Thank you guys for your take on this. Rod, I understand you have two images when you think about this topic at hand. One is, okay, EU is sort of like similar in terms of one country, and then at the same time, it's maybe not, because you have very local policies. And then the second image you've brought up is a bit the decentralized versus centralized approach to crypto, which can be applied or not. And I think, Max, your biggest takeaway is time will tell which model will actually work best. Now, essentially, as a summary, I think the US is very much going for a centralized model. Another image that popped up in my mind is that the EU is somewhat fragmented, and yet you have fragmented, and not only fragmented, but also decentralized. But then again, you have a very centralized AI model and an approach and data center approach. And then you have China, which is obviously a united country, but has a very decentralized and distributed way of thinking about data centers. Now, my ultimate question to you both would be, let's say we are not part, sitting in the EU or wherever we are right now, but rather we are aliens coming to planet Earth, and we see these two approaches. What do you think is the implication then on different things that are relevant when it comes to AI, such as data security, privacy, and also speed of technology advancement or innovation? What are your takes on that?
I'll just go quickly on this, Chris. I think while you're mentioning about the different approaches, I think one thing that comes to my mind was think of it like a value chain. So when you have bundling in one part of the value chain, you have unbundling on the other side, which means, let's say if you have a lot of different models, then you will have a centralized tool that basically pull all the models together for you to then build on top of those tools. So then if I were to think of it from a country perspective, right, all the way end to end, from setting policy down to data centers, down to models, down to computing and the middle chain application, etc. So if you were to have all those put together, my question is, I think the value chain or should I say, my thought is the value chain will be very different for those different countries because of the approaches. Therefore, if you're an investor, you're putting capital, you kind of have to understand the market dynamic from that perspective, right? It's centralized in a certain ways, decentralized in a certain ways. Therefore, you're going to have more competition in one region versus more competition in the other region. And then the other question I guess I have is you're not just competing for companies in those regions, you're also competing between regions.
Yeah.
So who is going to win out from a regional perspective? I think because of the internet kind of decentralized that, if you will. So I guess, speed is of the essence. So far, we've seen the US leading AI. I guess that is, there's no question on that. But at the same time, will then consumers start opting for different types of, I would say, safer AI because they do not want different types of AI being used, for example. So I think the implication is, when it comes to investment, especially if you think about VC, really, if you invest, it's about continuously getting more capital at every single round after that. Like you have to really think about the competition landscape, the bundling, unbundling of those value chain. I guess the second thing, I guess from a regional competition perspective, country versus countries, I think the US, by far, it's still the biggest when it comes to country, when it comes to spend, when it comes to unity. Well, provided the 5th of November, election doesn't start a civil war. But yeah.
Funny you say that, Max. So there is a conference happening just next week, and then the organizer was telling me, ideally, you should arrive before the start of the conference, so you don't know what will happen, and maybe they will grant flights and so on. So it seems that some people are factoring in here potential turmoil taking place.
And I think while you're on that, right, whomever gets elected will also have different views on the policy, on how this is being implemented. Hence why I said, they will be thinking about how US compete with the world when it comes to AI. So I think, but then if you go to Donald Trump, for example, some of the policies that he has been mentioned so far is about, I guess, reducing taxes for the larger companies, which means they have more money to spend. So then that will also have implications on folks that are building AI or folks who are competing with some part of, these larger companies, for example. So it's just, it depends on your role. You might have to understand within which part of the value chain you are in and how fragmented or how consolidated they are.
Yes. I was thinking about your question, Chris, on this perspective of how will, let's say, aliens see it from the outside. And I would say it comes down really so it boils to two things. One is perception, and the other one is legislation/restrictions. With perception, I mean that even if, let's say, China in many areas is far ahead than other geographies, in the end, the perception of doing business there or deploying your models there or running AI there, at least in this part of the world, is not necessarily seen as something very positive. Even if, let's say, there are no restrictions, even there is no regulation and so on, people will say, why are you doing that? So this will not be well seen. And you can also see that with other geographies. So even before in Eastern Europe, there were all these conflicts and wars and so on, but also in the Balkans, etc. If you as a company, let's say as a VC-backed startup will say, hey, in fact, I have there a arbitrage that I can play in that I have really good tech talent and costs are rather low, let us open a satellite office there. Immediately people say, hey, why are you doing that? This is not good. And then potential client will say, hey, but then I will have developers from these countries looking at my data, getting access to my system and so on. I prefer not to do that. You can see it also, for example, companies, especially in the security sector, etc., how it has become really, it has to be, in the case of the US, let's say made in America in order to be accepted by the market, by investors and so on. And similar things will happen across AI. And then it comes to the second point, which is whatever progress other geographies make, for example, the case of China and so on, then you always see the US coming and trying to introduce some type of limitations and saying, okay, NVIDIA, you're not allowed to sell GPUs of this type to this list of countries. And not only NVIDIA, but also the chip makers. And they're also now going not only to the manufacturers, but also to the manufacturers of the machines that manufacture these chips and so on. So it's becoming something where it has to become much more autarkic. And then as a result becomes islands. You have the Western-led Iceland, and then you have maybe some Chinese one with other satellite countries. And each of them will have their own infrastructure, their own resources, their own AI models, and so on. But I would say that this will operate pretty much within these islands, because also we have that you see for specific models, for specific technology, there are licensing issues where it says you're not allowed to run this if you are a citizen of these countries and so on. So all this will make that even if the technology in place A or place B might be better or worse, it will be this legislation, restrictions, and perception who will determine where is it that you're running them.
Very interesting. Thank you both for your concepts. Really liked yours, Max, around thinking about this from a value chain perspective and as an investor looking into different pockets of opportunities around that. And then I think the second thing you mentioned was looking at it from a country and regional perspective. And then, Rod, I think your points were really around perception. And then also in my mind, it's really coming down to sabotaging, right? Basically, what I'm hearing is, as a company, if you wanted to, or as a startup even, or as a co-founder or entrepreneur, whether or not to build in China versus building in the US also comes with the implication of how does it look upon you as the company, and the perception that people might have of you, or the trust that they actually grant your business, is, I think, really what it comes down to. And then the second point you're mentioning is around the US then restricting, or we see a lot of these tariffs now coming up when it comes to Chinese products. So clearly there's a divide here, and clearly there's obviously some mistrust on both accounts. So thank you guys for, doing this thought experiment and exercise with me on China, as well as looking at different other AI approaches. I do believe it is good to tap into that, just so that we understand that there are other ways of doing things, right? But now, coming back to the main part of our podcast today, which is the Excel report that was just published 1 or 2 weeks ago. And just to summarize this for the audience who didn't have the opportunity to look into this, essentially the report's narrative is the following. AI obviously getting lots of attention, lots of funding. I think it is also the only area that is really growing exponentially, while all other things, in particular cloud, has been declining. So from a quarterly 40% growth to only 15% growth within the last 3 years. I think another message from the report is that everything is coming down from COVID highs, and it has not been coming back to that COVID high again. So essentially you see years of let's say very incremental growth. Then you have these 2 crazy years around 22 and 23 where COVID just really, inflated everything. And now we're sort of coming back to the incremental growth in lots of different technologies. I think another thing that the report mentions, and that's also something we've spoken about in the past, is around enterprise software spend, that also coming down, and also a shift from cloud software or general IT software towards Gen AI. So we see a spend increase in 30% versus a median minus 17% for anything that is non-Gen AI. Then we also see, obviously, on the exit front, IPOs are not really recovering. So we don't really see that as an exit route for a lot of startups or companies that are looking for an exit. It's still an M&A activity game that we're playing these days. And in terms of funding, of course, the US is dominating with mega rounds, 56 billion in total, 25 billion in the US and 6 billion in the EU, which is obviously just a 1/5, so to speak, of the funding we see in the US. And of course, there's also high consolidation and high concentration in only 6 companies. And most of the funding goes into foundational model, which also we've spoken about. So really, we talk about the open AIs, etc., that really get the lion's share of the funding. Another 3 things I want to point out is, obviously, we also talk about quicker product to ship turnaround time, better performance, lower inference costs, which is really, let's say, maybe kicking off the second wave of AI. We spoke about AI agents. We spoke about generative intelligence. I think that's also something where we now see a little bit of numbers coming up. Of course, from a player point of view, we have 3 types of players: the tech giants, the titans, the Amazons, the Googles. We have the AI majors, the private companies that are, sort of really making a dent into the field. So the OpenAI and Anthropics. And then we have let's say the second followers or AI challengers such as Mistral and Cohere. And then last but not least, I think another thing that I want to highlight is that we are also short on talents. Um, and so a lot of these companies are paying tons of money just to like get the best talent from the market. And this is essentially where we stand in terms of the AI development over the last, maybe let's say 2.5 years. And I will make a pause here. I think this was a lot of information, but perhaps Max, Rod, you guys can like break it down a little bit for our audiences and let us know, what did you stumble upon, what was surprising to you, and what was maybe also not surprising to you. And maybe we start with Max in this case.
Great. I think, I guess the first thing I'll start with is, I guess the enterprise software spend under pressure, which is the first page that they talk about. I think that is, to me, I felt like that is long time coming. It also shows that, you're going through a maturity cycle, or, a software cycle of, there's a huge maturity, and a lot of, I would say, larger buyers are also, I would call it, consolidating across the organization. And you are seeing enterprise software basically eating into each other's market. It's no longer just one niche, for example. So you're starting to see a lot of that play out. So number one. Number two, I guess the thing that I keep having in my mind is, if you think about public markets today, a lot of funding actually went to, the Magnificent Seven, the Mac Seven. A lot of all the, I would say, increase in value actually goes to the larger tech companies. And where does that leave all the enterprise software folks? And it has direct, I guess, implications for how they would eventually develop software going forward. What do I mean by that? Today, a lot of their, the rule of 40, which is EBITDA margin as well as growth. Growth has come down quite a lot, but the margin is still there. So which means they still have some or a lot of cash where they can spend on building using AI. So I think whilst they I guess spend on enterprise software under pressure, good thing is it will force them to start thinking about what other things that they need to build on to be able to continue serving some of these larger enterprises. Number one. Number two, we always talk about this, which is around distribution. Because they already have those distribution, it will allow them the ability to continue to build with some of the larger companies. We're actually seeing that, people who wants to push out new solutions, they want to co-develop with some larger companies because they have established some sort of trust, as compared to a smaller startup trying to disrupt part of the enterprise software value chain. Like, they have to redo this from start. So I think it buys them some time, but it's good that they feel the threat. I guess that's my general sense. So that's number one. I guess the second thing that I'm looking at is around the exit, which is, cloud IPOs are really slowed down, like, massively. There's a peak of, cloud IPO in 2021. There's about 46 IPOs on that. But then, and now I do not want to be in, banking and internet, because technically there's just no deal within ECM for IPO. But having said that, the funding for private markets actually increased, right? It's still pretty high. It's just there are no exits. And I'm just thinking, over time, how does that play out? So which means we have a lot of dry powder from the funds. We then deploy it into a lot of the larger software companies that uphold, more, I would say, higher private valuation. But then they don't actually have the ability to be able to sell it yet. So does that mean that, one, in the long term, when everything nets out, a lot of them are going to lose value, which means if you're later stage investors, you probably want to think about that. Or two, when they actually live up to that level and go public, with some sort of ability to reset their value in a way. So I think those are something that I've been thinking about. And then there's also the third thing, which is around the sponsors activity. We're seeing, PE funds buying out some of these larger companies. I think if you're generationally good software, sure, but yeah, I don't know how much value some of this sponsor-led M&A will add to some of the larger companies, simply because they either shed them or they combine them together. I used to work for one that is owned by a larger company, Vista. They combine two very large banking software company that they have been trying to float it for ages. They haven't been able to. And with the capital consolidating to a few players, like where is the exit going to come? The Vista, the M&A of the world will still have to pay for the loans that they make for all these LBOs. So I must say we're getting into a very tight market for liquidity. That's what I'm trying to get to, right? Like all your valve for exits, it's you're looking at it at a, I would say, not so, I guess, bright future for the short term. But in the long term, maybe things will come back again. Sorry, that's a long-winded way of saying the exit is blocked in certain cases.
And Max, can you help the audience also understand what that means? Like, what does it mean for like an early stage investor? What does it mean for a later stage investor? What does it mean for startups in general?
Yeah.
Like, what does it mean for innovation in general also?
I think for a startup, let's start with that, right? So for startups perspective, I think if you're really starting out, I think there is some opportunity to compete because some of these larger companies will eventually have to consolidate their activity. They no longer can just spray and pray. They might actually come back to their core and say like, what are the best things that we do? Everything non-core, kill it, which means it creates new opportunity. So that's one. So you could potentially partner with them and get to basically tap into their distribution for you to build your solution over time. So I guess that's one thing that I would think about from startup perspective, which means all the non-core stuff for all this larger enterprise software company is an opportunity for a startup. I guess number two, from an investor perspective, however, especially early stage investors, I feel like they should really look into some parts of all this non-core activities, simply because those are the places where you're going to get the largest growth. Because some parties will need to share. The larger the buyer, the enterprises will still need those software, which means there's still a lot of opportunity from an investment perspective. I think if you're a late stage company, a late stage investor specifically, looking at all this larger enterprise company, it's really trying to understand the core business and understanding where the potential growth might come from. Just because you consolidated doesn't mean that you're better. We're seeing this not just in software companies, but also in larger companies from Disney to Nike to Starbucks, right? All of them are having their own issues and they're starting to shed things that are not relevant. I think the same idea will come to the software world. If anything, it probably move quicker, because it's a lot quicker to build a competitor in software than in those larger companies, right? It will take you ages to build up to start a Nike, for example, as compared to starting a Salesforce. So I think those are some of my key, I guess, takeaways, especially if I were to think about investing.
And Max, maybe help us give us the three key takeaways in just a summary.
If I was just summarize it, I think in the short term we're going to feel a little bit of pain, simply because the exit is not going to come so quickly. I guess number two, there's still a lot of dry powder within venture ecosystem. Like there's just tons of funds, which means there are a lot of opportunities. And then number three, I will watch those larger enterprise software closely, trying to understand where they shedding. I think there lies the opportunity in my head, at the very least.
Great, Max. Thank you so much. Rod, what are your thoughts on the report?
I wanted to connect it also with China, so where we had the CEO of Baidu, this large Chinese search engine, like sort of like a Google of China, Robin Lee. So he was saying that we're in the middle of an AI bubble, and he predicts that 99% of AI companies will not make it. So here, yes, we're seeing that investment and so on maybe is being allocated towards AI companies. But also no reason why this allocation is happening is just the cost of running an AI company. When you see that companies like OpenAI or Cohere or Anthropic and similar, they need to raise really in the order of billions in order to remain viable. Then you see how necessarily a larger part of the pie needs to go into this type of sectors, not only because of salaries and overhead to hire this top talent, but also just because it's expensive to run all this infrastructure. And thinking also about the idea of there is high demand for AI expertise, I would rather say that at the moment is more of a market for employers where, yes, there is a lot of hiring happening in the AI space, but we should keep in mind that alone in the last 2 years, around 500,000 people have been laid off in tech. So you see that, for example, Intel is reducing 15% of the workforce. Cisco, they announced they will be reducing 7%. Also, of course, you had all these meta layoffs in the last couple of years. They amount to like 20,000 plus people. And all of them are top profiles, right? So any company will dream of having a meta developer among the ranks. Cisco, Intel, of course, they have really good talent. So as a result, you're seeing that, yes, there are openings. Yes, there is a hiring in the market, but also there is a lot of competition with really great profiles, job hunting. And the silver lining of this is that while at the same time, all eyes are set on building AI companies, hiring this top talent and so on, I see that thanks to the advancements that we're having in the AI models, how fast it is now to generate code to program, for those interested in building classic SaaS applications, a CRM, some sort of ERP, some whatever it is, invitation manager or calendar manager, any type of these things, they will be able to do this just maybe even as a single developer, maybe as a small team. So I see that there will be like a renaissance of indie development, of companies doing small software applications, and these companies having maybe 2-3 persons, and that's it. So through a mix of not being able to find good opportunities in job market, but also thanks to what enables to develop together with AI, having like a copilot that is helping you generate code very fast.
I love these two answers you guys gave us around essentially business cycles, market cycles, right? So, Max, you're pointing out short term, this might be a crunch, but still there's opportunity lying around the non-core areas. And this is really where startups and investors are supposed to like focus on. And Rod, you're talking about the talent cycle and sort of like, I think maybe also a lot of people have overhired during the COVID highs, and now they're shedding off some of that layer, and now you have a huge talent pool looking for a job, which essentially can also spur another innovation cycle, which is also why I love to be in this space, because as you say, right, like, I mean, you have such talented people that may have a hard time finding their way back into like a corporate kind of career. So perhaps, a fraction of them will be interested enough to start their own thing. And so we will see another cycle of CRM systems, productivity systems actually popping up with their respective knowledge of what they have done in the past. Great. Guys, this was super, super interesting. Thank you so much. For the audience, I would really encourage you to look at this report. I think it is a very nice summary of the state of AI today, and also giving a little bit of an outlook. I think also some of the things that we've spoken about in the past, such as AI agents coming up and other trends. But this is maybe for another episode. But for now, thank you so much for listening in. And if you have any comments, if you like what we do, please subscribe, please leave comments, please leave feedback. We love to hear from you. And on to the next week. Thank you, guys.